just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Friday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Ben Kitchen here with you as we await the kickoff of the Celtics Victory Parade to start at 11 a.m. through the streets of Boston and on the duck boats, and we head into a summer weekend that looks like it's going to be a hot one. Taking a look at markets at the moment, relatively mixed. Pretty slow trading day at this point with the S&P off about 0.25% and the Dow Jones up over 50 points. We're going to start our show today by talking about this little known company called Nvidia that has been dominating the market headlines. And Marc, I thought a nice piece here laid out in the Wall Street Journal, nice is probably not the right way to put it, but informative as to just the impact that Nvidia has had on the stock market as a whole this year, and even dating back to last year as well. It's grown to a size that is just a behemoth in the space of the likes of Microsoft and Apple. Certainly its impact on the technology sector of the S&P 500, which has close to about a 30% weighting, has been large, and I want you to kind of cover that a little bit. But if we look at just the headlines here in this piece regarding Nvidia, the stat that blew me away the most was that I believe since 2022, 44% of the gains that we've seen have been attributed to Nvidia's meteoric rise. And that to me was staggering, though I'm not overly surprised just with how much it's gone up, but it's just been a tremendous increase that we've seen over the last year and a half or so.
Yeah, I see that, and it's impressive. It's only human to be wowed by the size of the company, which I don't know the pace of doubling. I should have done a back of the envelope on that, but it's doubling at a rapid pace. And it continues to plow ahead, which given its size is pretty remarkable because growth rates typically slow down. Whether or not that's reasonable, whether or not that's predicated on reasonable expectations for sales and other metrics that investors actually care about is a slightly different question, but its run-up has been impressive. And it's the percentage of gains in the broad market, which are attributable to that run-up, are also remarkable. So it's hard not to be impressed by that, but then again, it's always something. Something's driving the market. Sometimes it's very lopsided like it is today.
Sure.
It seems unusually lopsided, and the author, James McIntosh, who's a widely respected columnist. He writes now for the Journal. He used to write for the Financial Times. I don't know where he was before that. He makes the point that this could be a problem, I guess, for the market, because if investors turn on Nvidia for whatever reason, or if the growth simply slows, which it's got to at some point, where are the gains in the market going to come from? You can always ask. I'm not worried about that. You can always ask that. He may have a point, but you could always ask that question. I wouldn't worry too much about it.
That's a good point to make, that because that is something that you do think about. If you look at just the S&P 500 and what it's made up of, Microsoft, Nvidia, and Apple each represent about 7% of the S&P 500, so 21% total. If you further that list a little bit more to tie in some other magnificent 7 names, Amazon, Meta, and Google, there's 2 different share classes for Google, but I'm going to combine them together for purposes of the percentage ownership or the percentage weighting. About 30% of the S&P 500 is really tied in those 6 companies: Microsoft, Nvidia, Apple, Amazon, Meta, and Google. So to your point, Mark, it's been the case before that these Magnificent 7 got their nickname for a reason. They were large contributors to the market performance that we saw over the last year plus, and there's been other times historically where a constituent of a couple companies have led to a lot of market gains. But from a size perspective, it is reaching a very significant weighting, and just as easily as it can go up, 150% year to date through today's trading, it can revert back down in the other direction, which could have an outsized impact on portfolios.
All else equal, that would be bad, but
Right.
we don't know what all else is going to be doing. Other sectors could rotate back into favor, or investor sentiment, I should say, maybe could rotate back into in pushing other sectors into favor. Either way, that's very awkwardly put, but you know what I mean.
Yeah.
What we ought to be thinking about as people who manage other people's money, and what I submit that investors listening should be thinking about, are prospects for the economy more broadly. Now, those are intertwined with prospects for AI. You sort of can't separate the two these days. But undoubtedly, I can predict one thing with near certainty, which is Nvidia will not be the talk of the town 5 or 10 years from now. It just won't be. The growth will level off. It'll become mature. It may even get displaced. We know that companies that depend on AI for chip design and for servers and the other key components of data centers that Nvidia is now providing, companies like Microsoft and others are scrambling to develop they don't want to be dependent on Nvidia.
Right.
So something will displace it at some point. Something else will therefore displace Nvidia as the Apple as the darling of the day for equity investors. And life goes on. If you own a market cap weighted index, you benefit from this. You'll also benefit from whatever comes next, which is one of the virtues of owning a market cap weighted index. And by that, I mean an S&P 500 or Russell 1000 or anything that has broad market index if it's in your 401k plan and it's called a broad U.S. market index or something like that, or a large cap index. You own all this stuff. You don't have to worry about today's or even tomorrow's winners. You'll own them in proportion to their share of total so-called market capitalization.
It is interesting as we almost get 6 months through the year here, just Nvidia's gains relative to some of the other companies in the S&P 500. And Mark, you mentioned that point that, to me, you almost can't separate them as what you said in terms of the AI frenzy and hype versus just what is the broad economy doing. But in some ways, the trading has been really powered by the gains of Nvidia and Apple and Microsoft and others. That's what we've seen from a year-to-date stock performance, while the other about 198 stocks in the S&P 500 haven't managed any gains this month. Half of the S&P 500 for the course of the year is averaging, relatively flat.
And is that unusual? I don't have perspective. I'm sorry, I don't have the data. You'd need a Bloomberg or FactSet and then a lot of time to crunch the numbers. I don't know. Forgive me for admitting my ignorance in front of everybody. I don't know whether today's concentration is extreme and unprecedented. My sense is it is nearly unprecedented, with the exception of the dot-com bubble and maybe the Nifty 50 bubble of the very late 60s, early 70s. I think I'm getting those time frame bookends right. But it's not totally unprecedented, nor do I think the lopsided nature of recent gains is totally unprecedented. Something's always coming out on top, which again is the reason why people who aren't professional stock pickers, like me, buy an index fund.
Sure.
Something's going to do better in a relative sense. I just don't know what stock or sector will be in favor at a particular point in the market cycle. Owning a broad-based index fund, at the risk of repeating myself, provides you with some insurance that you don't miss out.
I'm sure it's not unprecedented in the sense that Microsoft and Apple have had these tremendous years where their performance has significantly impacted the S&P 500. So this isn't a one-off. It does seem like usually it's the group together that it's maybe 4 or 5 names that are driving it. Not to say that Microsoft and Apple haven't been a little bit additive, particularly Apple more so recently, but really this idea that on the AI front, there has continued to be a significant amount of optimism, and you're now seeing what we'll talk about, sort of a trickle-down impact to some of these other companies. But on the other sectors of the market, just haven't seen as much of that same growth because of perhaps the worry of a slowing economy.
Well, there are really, I think, a couple things to my layman's eye going on here. This is not, I don't look at this sector carefully. There are people who are deeply specialized in this area. But Nvidia's sales are for real.
Yes.
We know that.
That's important to note.
But will that translate into something that which we all care about probably a little bit more, unless you have a personal stake in Nvidia specifically, which is economic growth? How is this going to play out for the economy and stocks in the longer run? That is an open question.
Certainly. We're going to take a quick break here on the Financial Exchange, but when we come back, we'll be doing a little bit more talking about AI and Nvidia and its impact on the tech sector, and we're also going to be discussing the Chinese electrical vehicle market. That's right after this break here on the Financial Exchange.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. Help us support these great American heroes by visiting DAV5K.Boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or make a donation, visit DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Just to wrap up our discussion on Nvidia, we were covering in the first segment of the show just the impact that it's had, particularly if you look at the market this month. It has led to a lot of the gains that we've seen month to date. And then if you go back to 2022, 44% of the S&P 500 gains have been tied to Nvidia and its performance over the last close to 2 years or so. What's also happened is we've now seen more recently companies that are in the same ecosystem of the tech stack spread, I'll call it, where they're either doing chips, software, components, just any part of the IT infrastructure, have started to benefit from the optimism and continued fervor for AI. Oracle is an example of that. Their stock was up 17% off news that they had closed a deal with OpenAI to have OpenAI, its large language model, trained and be held on the cloud infrastructure for Oracle. You've also seen Hewlett-Packard Enterprises up about 24% as AI demand has really caused investors to reassess their outlook. There's another story in here, Mark, which is just a classic coulda, shoulda, woulda, where SoftBank chief CEO was mentioned by saying that they had a 5.5% stake or 5% stake in Nvidia back in 2019. They sold it at that point in time, made $3.3 billion on their investment, but that investment gain today would have been under $50 billion.
There are a lot of people, a lot of us.
I wanted to point it out because that's the market, man. That is the market entirely.
What do you mean?
It's all woulda, coulda, shouldas. Everyone has these. Not this dollar number. That's why it gets listed in the Wall Street Journal, because 150 billion is a really big number. But everyone has these stories over time. If I had only bought Apple back in 1998,
the difference is this guy's a fiduciary. It's as if you had a pension fund or a 401k plan. There's a manager on the roster, and they sold Nvidia prematurely. They do deserve to be asked, what was your thesis when you bought it? Why did you think it was undervalued at the time? How much did you think it was going to go up to, and why? This guy should be able to answer those. I'm literally pointing a finger at the story, but I don't mean to point the finger at him. He was probably acting like a responsible fiduciary, and it sounds like he was. He says it hit his price target. He needed to de-risk, as these guys like to say.
Yep.
And he thought his capital could be deployed more productively elsewhere. He's executing his duty as a fiduciary. He acted prudently. A fiduciary's duty is not to is not to buy things wildly hoping something will go up infinitely. It's to be a prudent steward of a third party's money. We do that every day here, and a lot of people do. So I don't take issue with the process as long as it was based on sound decision making, and it sounds like it probably was.
Oh, absolutely not.
I guess I'm quibbling with the tone of the story. Well, like his job is to guess in advance what's going to go up 200% a year indefinitely? Of course not.
And to be clear, they do outline in the piece, this is SoftBank Group founder Masayoshi Son, who has made tremendous investments in other companies like Alibaba and others, and ARM Holdings that have done tremendously well. So it's just something that catch the eye, and the quote is the fish that got away, but certainly has done a good job.
I think there's maybe a little lesson here. If you have an advisor and they bought Nvidia for you 2 years ago, it sounds ridiculous to question the decision. Oh my God, this thing's up 600% since then. They're a genius. Maybe, or maybe they're lucky. Go back and look at the notes. What was their, as they say in finance circles, thesis at the time? What was their idea? What motivated the purchase? What did they say they thought the stock would do, and why? Mm-hmm. Most, in my experience, just kind of got lucky. Now, that's okay. There's room for that. There's a strong element of luck in every investment manager's performance, but it's good, especially in exuberant times like these, exuberant for certain sectors and companies, to question an investment manager as to why they bought it in the first place, and whether or not the thesis that underlied that decision is still valid. I'm not talking about just Nvidia here. I'm talking generally. It helps you separate luck from skill.
Sure. No question about it.
I know that it sounds counterintuitive. Like, it went up, you idiot. Just celebrate. And the guy's obviously a genius. Maybe, but maybe not.
There needs to be a little bit of time for celebration here and there when you do pick a strong investment. But switching gears a little bit, we got some fresh home price data come out this morning where we saw home prices rising in the month of May to a new high. We continue to have low inventory spurring bidding wars amongst home buyers in some markets. What we saw, the national median existing home price rose 6% in May from a year earlier to $419,000. That is a record percentage-wise going back to data from 1999. We have had mortgage rates peel back a little bit. That's not reflective in this data here, where we were sitting at about 7.15% on the 30-year fixed mortgage. That rate is now in and around 6.8% or so. So perhaps that will spur on more activity, but the continued story will always be the amount of homes available. And as per this most recent data dump here from the National Association of Realtors, we are still at a point where affordability is a significant challenge. The decline in home sales was expected, but we still have very minimal inventory out there, Mark.
Yeah, I guess I'm not. I don't find low sales increasing prices to be inherently contradictory when you look at but it's presented that way here. Home prices are up 50% on average, according to Case-Shiller, not NAR, which is the source of the data we're talking about right now, but 50% since 2020. That is an unprecedented rise. In no era have prices risen that quickly, that steeply. That's equity-like. In fact, that would be awesome performance from equities. Equities are up, like 90% over the same time frame. So house prices are behaving more like stock prices than like residential housing prices, at least as they've historically behaved. And you wonder, in light of very slow population growth and solid but not fantastic economic growth, in the rearview mirror, looking ahead, economic growth is expected to be modest by historical standards. Will there be sufficient economic propellant for this to continue? I don't know. We're dealing with still a massive a problem of massive undersupply relating to the Great Recession and the lack of building that occurred during that 7-8 year period that surrounded the Great Recession.
Yeah, it really
followed, I should say.
You really can't emphasize that point enough. It just has had a tremendous impact from a long-term perspective. We also saw new housing starts yesterday. That data came out. That was down about 5.5%, I believe, month over month in terms of the amount of new home construction that we've seen across the United States. Taking a quick look at markets, we've got markets relatively in mixed territory here, with the S&P 500 off about 8 or 9 points and the Dow Jones up about a little more than 100 points. We're going to take a quick break, but when we come back, we'll have more detail on the markets with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the I.R.S. a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the I.R.S. back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the I.R.S. from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the I.R.S. a lot in back taxes, you could have your entire tax bill reduced to zero due. The I.R.S. has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now. by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say. And there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable, so don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 866-848-5699. Or you can also request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
All right, well, markets are in mixed territory as we look to close out a shortened trading week. The Dow Jones is up 102 points. The S&P 500 is down 11.25 points. The Nasdaq's down 57 points. And the Russell 2000's down 6.3 points. Nvidia shares are down 3.8%, adding to losses from Thursday when Nvidia closed down 3.5%. The decline comes after the AI chipmaker on Tuesday briefly topped Microsoft as the world's most valuable public company. Athletic clothing maker Nike is up 0.8% following an upgrade at Oppenheimer to outperform from market perform. The firm also reinstated Nike as a top megacap pick, saying that the stock is poised to rebound gradually as the company refocuses on product innovation and brand building. Gilead Sciences stock rose 4% on Thursday. Gilead announced that an HIV prevention shot succeeded in a late-stage trial. Shares of the online lending marketplace LendingTree were down 1.8%. Bloomberg reported that hackers are now auctioning off stolen data from the site. LendingTree was the victim of a cyber attack against cloud computing firm Snowflake. And finally, taking a look at Apple. Apple stock is up 0.5% following a price increase from Bernstein. Analyst Tony Sacconaghi asserted that the more bullish outlook is tied to his view that Apple can emerge as a leader of the artificial intelligence boom, not a lagger. I am Ben Kitchen, and that was Wall Street Watch.
Target is trying to figure out AI and how it is going to change the retailer's business model. In the first infancy form, it will be a chatbot that they are rolling out to help workers better answer questions from shoppers and workers. And immediately, Marc, I thought of Home Depot as a prime candidate and Lowe's for this type of technology. Now, I know that Home Depot does have an app where you and I can log on and just enter in an item to try and determine what aisle it may be in, but that's my biggest problem stepping in there is trying to find out where things are. And if you ask people there, they often are not the most helpful in my experience recently. So if they're able to unveil this to employees there, then that would be a great help. This is what they're trying to do with Target, where it will help answer questions on where items are. It will allow Target workers to more easily get information as to how to reboot the cash register, enroll clients in their loyalty program. So they're unveiling it in about 400 stores as a test run, and maybe to most workers in their 2,000 locations in August. Thoughts?
A little underwhelmed. Okay, this is again.
Do you agree with me on the Home Depot Lowe's point? Or you don't have trouble finding anything?
No. I do. I normally go on the app and.
Does that work pretty well?
Locate the. Yeah, in my experience, it does. Yeah. I'm not an every week. I mean, I'm sort of a do-it-yourselfer, but I'm not there every week. So maybe people who are more frequent patrons find it more useful than I do. But I'm wondering, we talked in the last segment about the valuation, or the price, and as a consequence, the valuation of companies like Nvidia, and what needs to happen for those valuations to be realized. AI has to permeate the economy, change our way of living.
This ain't it.
This is why I say I'm a little bit underwhelmed. This is not what I had in mind when I thought life-changing technology. So I get to where I want to get or need to get in Target a little bit quicker.
Yeah.
Compare this to the changes wrought by the internet. Now, having lived, you guys may not have lived through it, so I don't want to sound like the know-it-all old guy, but those of us who did live through it can testify. It was life-changing. There was new technology coming online regularly that made your job easier, that allowed you to do your job more easily, that made you more productive, and it was just neat.
Mm-hmm.
It was a really cool time to be working in a consumer of technology. And even then, the benefit to the economy was pretty brief. Productivity jumped for about 8 years. Thus, economic growth jumped because productivity is a key contributor to potential economic growth anyway. But then it subsided. So it came and went.
Mm-hmm.
This is true of many technology, many innovations. I'll just speak generally over time. So is this going to change the trend? So far, nothing I've seen suggests that AI is going to change the trend line of economic growth that has prevailed over the past, say, century and a half in this country. And that needs to happen for the gains that are being, for the optimism that's being priced in, if you like, to some of these companies by shareholders right now is to be realized.
And to your point, it takes a long time for mass adoption to be reached. You know, when you're talking about the unveiling of new technologies, maybe some firms have it initially, like you're probably harking back to whether it's Bloomberg or, the quote system evolving, or you can pick any sort of technology, Excel spreadsheets, whatever it may be. It takes a while for that to reach a mass audience of all businesses out there. The same thing applies for AI.
Once the PC got on desktops, it was at the time Lotus, but Lotus is the precursor to Excel. Lotus 1, 2, 3 was the original spreadsheet, at least that I remember. Excel hasn't changed much in 30 years.
No, it hasn't.
No, in fact, I was lamenting this point to Chuck Zada yesterday. It takes me as long to move charts into a document to make everything sort of coherent and come together today as it did 25 years ago. And no meaningful improvement in productivity there on the part of Microsoft. It just leaves you scratching your head.
And that's what AI is supposed to be able to ease the burden of, there. But
if you work with a document in Microsoft, you're formatting charts individually, for example, you're doing the same darn thing to every chart. It's so repetitive and tedious. Why does this software... I'm going to get off on a little bit of a tangent here. I'll keep it really brief. Why do I have to keep repeating the same thing? Why doesn't this thing recognize that I want to do every chart the same way, or that I want to repeat the last, say, formatting changes that I made to something to subsequent materials? I just don't get why I'm spending as much time in Microsoft software specifically today as some people are probably thinking, well, maybe you just suck at it. And that could be part of it. Part of it, too, though, is that they haven't made it easier for people to use.
TBD, I guess, on the impact on Target. Mark is not too optimistic.
I'm just a little bit underwhelmed. I love Target. Nothing against it. And, of course, it makes sense, right?
I do think...
Are you blown away by this?
No, I'm not blown away by it. The only thing I was trying to think in my head, maybe this replaces employees at some point in time. That was alluded to in the article, where... Do you need to have as many people walking around the store to answer questions? If they could just have some sort of kiosk-like thing, or just develop the app to where the end consumer could just search, where is this item? Maybe that cuts down on headcount.
I don't know. McDonald's experience is probably a cautionary tale.
It is.
We saw
That's a
earlier
very fair
this week
point.
that their software, and I'm going to again be crude and oversimplify, but it couldn't distinguish between various accents.
Yes.
So
Yeah.
is AI, again, I'm just talking very general here, is it capable of fielding questions from a diverse group of consumers?
Well, at least with what I'm speaking of here, they would be typing in, their questions rather than speaking.
So now
in.
people need to be,
But
able
then
to
that's
write
the point
and-
of why do you even go into the store? Why not you just order it online?
Yeah,
And type
I'm
it in
not
there?
saying this won't, on the margin, be beneficial. I'm just saying it's obvious, and nobody's making the claim that it's life changing, but it's a bit underwhelming.
Remains to be seen. Quick note here, we've got China. They've spent about $230 billion to build out its EV industry, a new study finds. That was done between 2009 and 2023. Scott Kennedy, the trustee chair of Chinese Business and Economics at CISI. This is something that isn't a surprise to me, Mark. They've subsidized the EV industry entirely. China, not entirely, but they've had a tremendous amount of help. In fact, it's close to 20% of total EV sales over that period of time, that 14-year span, was related to government support from China. And now, as a result, you have the EU and the US slapping significant import tariffs on electric vehicles from China. The profit margin that blew me away the most is BYD, which is one of the biggest EV makers in China. The net profit per car has declined down to $740 per car. And it's just minuscule margins that they're making on these cars.
Look, if the goal is to get greenhouse gas emissions down, the quickest way to do it, you said this, is to just import subsidized Chinese electric cars and let American consumers go nuts. If you're not embarrassed to drive one of those things, and I probably wouldn't be, I don't know. I'll just say it's probably good for the global warming problem.
That part it
but
certainly
we
is.
We have these two objectives that are in perfect tension. We want to create as many jobs as possible, create or keep them here, while at the same time increase EV purchases. I say those two things are in tension because we could achieve the former more quickly if we were just willing to allow more imports. But there's this protectionist policy goal wrapped up with the goal of the EV adoption. And it makes it harder to achieve the latter, I guess.
It is, and then at some point in time, though, you want to make sure that you have the infrastructure in place and you don't just let a country, subsidize it, and you don't want to be relying on just China for all your EVs out there, just to have all of your eggs in that basket because of all the geopolitical issues that could come at that point in time from just being reliant on China.
Yeah. I don't know. It starts to be, my head starts to spin between relying on this country or this segment of this portion of the supply chain for this good or that good. What should we protect? What should we not protect? I'm getting increasingly uncomfortable with these conversations, as you could tell. There are no answers to these questions.
Sounds like a good time for a break. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking about tourism in Europe. If you're planning a trip to Europe this year, you're not alone. They've really seen a significant uptick of American tourists. We're going to talk about that right after this break.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
The rules regarding inherited IRAs changed a few years back with the passing of the Secure Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Europe has a new economic engine. It's us, American tourists out there. Lisbon is reporting that they've seen economic growth of 8.2% from last year and a 20% rise in tax revenue. The mayor has claimed that it's just been a fantastic time for the city of Lisbon, the best in the last 45 years, and we're really seeing it across all of the EU. Back in the 2010s, Marc, Germany was able to get the EU out of its economic slowdown and debt crisis through its manufacturing prowess and the exportation of vehicles and other capital goods to China. But really the story more recently in some of the EU economic resurgence in companies like Greece and Spain and Portugal has been all tied to American tourists. And Mike on the show quotes some statistic out there that there's I believe it's 40% of Americans are planning European travel, and that was his sort of new sign.
What?
It was
30.
No way. Like half the country's going to Europe?
30 or 40%.
No, it was those with passports.
Oh.
30 to 40% were planning travel within the next year or so. I was blown away by it. He was using that as basically the proxy for the Taylor Swift inflation index, where he previously remarked that the amount that people were willing to spend on Taylor Swift tickets was evidence that inflation had gotten out of control because people were willing to pay thousands of dollars to go see her. Similar here with this story regarding European travel.
Or,
that is
Jerome
an
Powell
expensive...
screwed things up. But yeah, you could blame Taylor Swift if you'd like.
A little bit of both.
Powell's dithering.
But
sure.
However you slice it, if you look at Spain, they have seen themselves become Europe's fastest growing economy. 3/4 of that growth is tied to tourism. 1 out of 4 jobs is linked to tourism. And Greece is another one which you would not really think of as a likely economic star. 44% of their jobs have been tethered to tourism too. So the long and short is that a lot of people from the United States are going over to Europe. Ben and I were just talking off air. It's probably the worst time to go over the summer. I mean, not in the sense of the weather, but just it's a really popular area. Specifically, if you're talking about Lisbon or Greece, particularly in the Mykonos and some of those other areas. But there has been a tremendous amount of demand, and it probably picks up from the post-pandemic era where a lot of people were looking to get out there and travel. That has been the one constant that we've seen from a spending pattern is less focus on spending on durable goods, furniture, patio furniture, washer dryer, things like that. A lot more money allocated from U.S. households to traveling abroad and to getting out there and seeing the world.
Vacationing in Europe is cool and all, but there's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World-class cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Another concern that is prevalent every day, it seems like I'm constantly talking to clients out there that are victim of some sort of cybersecurity hack out there, whether it be on their bank account, credit cards, it's everywhere. And there's a story that Ben covered a little bit in Wall Street Watch where hackers are auctioning off stolen LendingTree consumer data, and this is just going to continue to be a problem. What had happened was a subsidiary of LendingTree detected some unauthorized access on a cloud database that was hosted by Snowflake, and as a result, there has been cyber criminal forums where there has been data posted there for sale, and it just is going out there to whoever the highest bidder is going to be, and just really emphasizes the point that I tell all clients that you have to be extremely careful with your data. But at some point, though, Mark, we've all been subject to a data breach that's impacted us. However careful you want to be with your data, we've had hospitals get hit. There's LendingTree. There's story after story of instances. Equifax was another data breach out there where more or less most of our data has likely been breached out there, and it just takes the end client to be hyper vigilant in terms of whether that's freezing their credit or taking measures to make sure that they are monitoring their financial situation on a daily basis.
Beyond freezing your credit, which is pretty easy to do and free, what do you tell people? How can you protect yourself?
You always want to make sure that if you are fielding a call that from some area that claims to be whether your bank or your finance institution, and they're claiming that there is an unauthorized charge or something that doesn't look right, say, okay, I'll hang up. Let me call you back. And then make sure you're doing the due diligence to actually look up what is the proper phone number for my Bank of America, for my Chase, wherever it may be, from a reputable site that you can garner the information from. That's really important because we see a lot of attempts there. Do not just let some technician on the phone take over control of your computer, because we see a lot of instances where they get control and then it's a done deal from that point. Obviously, passwords, making sure that those are being changed or they're complex enough. No password 1, 2, 3, 4.
Well, I was really hoping for just one answer on this.
Okay. We talk about it a lot.
This sounds like a lot of work.
We talk about it a lot. It's important.
Oh, I didn't realize you were so well informed. I'm sorry, Ben.
We're going to take a break. That's all the time that we have for the first hour of the show. Make sure you're keeping your information well protected. We're going to have a whole lot more information here on the second hour of the show. Stick with us here on the Financial Exchange. We'll be right back after this.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us, so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now. You've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior to, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001. The
proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years, so call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome back to the second hour of the Financial Exchange here. As we kick off the second hour, our Boston Celtics are parading through the city with their championship trophy, and we'll get ready to raise Banner 18 when the next season starts. Taking a look at markets, relatively mixed today, nothing incredibly significant. Dow Jones up about 45 points and the S&P 500 off a couple points through the first couple hours of trading here. We did get some housing data in the first hour of the show that we discussed a little bit. The average median price for an existing home sold in the month of May was $419,000. That was a record high price and a 6% increase over where it was last year. We also talked about Nvidia and the tremendous amount of gains that it has seen this year. That stock is off about 2.25% today. But we'll start the second hour of our show with just more of a sort of overall look at the economy. Inflation is something that we certainly have heavily covered over the last year plus, as it's been the most significant economic issue that we're dealing with. There was some research done by Monmouth University recently where it polled Americans in terms of what they were concerned about financially. And as of course you would imagine, inflation is at the forefront of most Americans' minds here. And Marc, we have reached a point on the inflationary front where we have made significant progress to get it back down from the highs that we saw in 2020, where headline inflation peaked at 9% year over year in, what was that, June or July of 2022. Yep. And now we sit at a level of about 3.5% or so on headline inflation. If you look at core inflation, that number sits relatively similarly around that same level. And as we look towards what is going to be the second half of the year here very shortly, the Federal Reserve is going to continue to have to digest economic reports that are being unveiled. It seems as if we sit in a point where economic growth has slowed down a little bit, not to an alarming amount. We've got a labor market that unemployment has ticked up to 4%, but still sits in a pretty healthy position. Certainly you could point to some jobless claims data to perhaps indicate a bit of a slowing, but curious to see your thoughts on just where we sit from an economic standpoint today with all of that context in terms of inflation and economic reports coming forward here.
I think you summarized it really well. The broad averages that are used to summarize the state of the economy by the data collectors in the federal government, Department of Labor, Department of Commerce, they suggest, relative to historical experience, a reasonably strong economy. This is not consistent with everybody's lived experience. And what do I mean by reasonably strong? I mean growth over the past 4 quarters, including the first quarter of this year, in which it slowed a little bit, is about 3%. That's an average. Mm-hmm. Some people will say, I don't buy it. I know plenty of examples firsthand of people who are struggling. But there are others, I guess, on the other end of the spectrum who are doing well, who are better equipped to reap the gains from this evolving economy, or just luckier, however you want to think about it. But economic growth has been reasonably strong, especially compared to economic growth potential, which is a product of labor force growth, which has been slow, and productivity growth, which has picked up a little, but on average over the past year has not been terrific. 24 months really. Past year has been a little bit better. So growth's been reasonably strong. Unemployment, epically low. Some of you will say, I don't believe those numbers. Or are you counting people who hold 2 jobs? Yes, the statisticians at the Department of Labor do take account for things like that.
I received, I'm just going to jump in on the labor front there because I'm interested in your perspective on it. Someone was mentioning to me that they were questioning the labor market numbers because they felt as if immigrants were picking up a lot of those jobs. It wasn't going to U.S. citizens. And I'm just curious your thoughts on that theory out there. I mean, it's just looking at job growth in America in general. It doesn't drill down.
Well,
to
an
that
immigrant
level.
is a U.S. citizen,
right?
Unless they're talking about illegal immigrants, in which case are they they shouldn't be surveyed.
Yep.
But I can't say that they're not. So I don't know how to respond to that.
Yeah, it was just some kind of conspiracy theory
Right.
kicked around, and so to me,
No,
I
But
said, how about just this idea?
But can I point out something about immigration? And
Yeah.
labor force growth is one of the two pillars, if you like, key contributors to economic growth. So we need labor force growth. We need more legal immigration. That they're going to pay my Social Security someday, and yours. So it's not a bad thing. Not to mention the benefits of bringing in educated people in particular. So you can argue, why aren't we taking the educated people who already work here, for example, make them permanent citizens? Yeah, sure. Whatever you need to do to grow the labor force legally helps everybody. Go ahead. I'm sorry, Paul.
No, the question I was going to go back to is, okay, if let's say they were questioning the labor market data, but there's multiple different sources that we utilize. So this idea that, to question those numbers, what I point to is that, hey, you can take your pick of several different sources. They're all pointing in a relatively similar direction.
Yeah, they're all collected. They're largely collected by the government. Some come from like ADP and private sector sources. Look, the job market is tight, like you said, Paul, by any measure. There's no point in denying that. There's no point in claiming the political party in power is rigging them somehow. It's the same folks calculating it, a couple of whom I know. I can say this from firsthand experience, career BLS economists. And by that I mean they were there during Trump. They're there today. Yeah. The numbers, and when you say, well, the economy was great under Trump, based on what? Your personal experience or based on statistics? Because in 2018, 2019, it was strong. We were hitting nearly 3% GDP growth. And he deserves credit for that. And I suppose by the same standard, you could give the present administration credit for the relatively strong GDP growth. Although I don't give any administration particular credit.
That would
there
be
are
my
other forces
point.
at work.
There's so many other forces at work.
But, Trump did run up the deficit.
Yes.
Those tax cuts were very stimulative. Biden is running massive deficits, also very stimulative. So policy can have, I don't want to poo-poo it entirely, can have an influence. My point is it's the same people crunching the numbers under this administration as we're crunching it under the last. And the last administration used to tout the good unemployment data, which is calculated by the same people who are doing it today. So I'm sorry, but you can't have it both ways.
Couldn't agree with you more. Just wanted to make sure that I got your
So why are people
perspective
so
on it.
down? According to the Monmouth poll that you were citing, they hate everybody. They don't think either Republicans or Democrats care about the average American or are particularly they seem to favor Republicans by a decent margin on the economy, maybe remembering the good economic growth years of 2018, 2019, where inflation was low and growth was about where it was today, and unemployment is about where it was today. It could be just a function of that in terms of political preference on the economy.
That's what I continue to get back to. Anytime we look at these surveys, and there's been a numerous amount of places that have collected this information, everyone, first of all, as a country, it seems like we like to complain. That just seems like inherent that everyone just likes to complain in general, whether it's about the weather or about the economy in general. But the inflation story to me is the end all be all. The amount of whether clients or talking to other show hosts here constantly mention the idea that things are 25 or 30% more expensive than
which is true.
They were. It's true.
Well, actually closer to 20, but that's okay. I'm not going to correct
what you're
somebody
looking at.
on that,
Housing 40 or housing 40, 50%. Any of these items. I quoted McDonald's earlier on another interview that their prices up 40% since 2019. However you slice it, prices.
I used that example this morning. I used my McChicken this morning as an example. It used to be like $1.79. Now it's $3. So I just order a lot of extra pickles.
Exactly, and it was the way I used it was
right, Ben?
The Big Mac is the Big Mac is up to the Big Mac meal is up to $9.29.
Okay, don't do that. It's a ripoff.
No,
offense.
I'm not saying I do. I'm just quoting the information that I was reading.
Be a savvy consumer, not you, Paul. But you don't have to get the Big Mac meal every time.
I
or
try
if you do get the soda with no ice, you get more soda.
Try to steer clear from it, but. Why do people think things are so bad? Because there has been inflation that we haven't seen over the last 10 or 15 years in a very tight period of time.
40 years.
Yeah, right.
None of us have ever experienced it. Even I don't remember inflation
relative
as we recently experienced.
I guess what I was saying is relative to a decade where there was minimal inflation at all. And that is going to take a couple years to shake off.
As we've talked about here, The price level, which is different than inflation. Inflation is the change in the price level. The price level is just kind of where the average price is. It ain't going back down other than under circumstances of a very bad economy. You don't want that in the post-war.
Absolutely not.
In the post-war period, it's never happened, really, since the introduction of the Fed and the idea of fiat money that just can be printed and not necessarily backed by gold. And we've been under such a system more or less since 1971. Inflation will not go down absent a severe economic contraction. The price level will not go down. You will not have deflation, and you do not want deflation. We had a little bit of it in 2008, and as you will recall, those were not happy economic circumstances. No. We have to adjust to the new price level while at the same time insisting that the Fed get the rate of change in the price level, which when it goes up we call inflation. Fed's got to get that under control. Maybe they have, but the jury's out.
You hit the nail on the head. It's adjust. Eventually, people and consumers will adjust and will get used to the $9.29 Big Mac or the $3 that Marc is paying for his McChicken. We'll get used to it. We'll get over it, and we'll move on. But until then, these surveys are going to continue.
I resent it. I understand the sentiment.
Buying a new car, it's everywhere. Buying a house, the same deal. We're going to take a break here on the Financial Exchange. When we come back, we're going to be playing a little bit of trivia, and we'll also have some I.R.S. freezing of a pandemic-era tax credit. That's right after this break. Trivia and much, much more.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt. Call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, I.R.S. tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only. Our look at state capitals continues on. As many of you know, a lot of the state capitals are named after people, such as Montgomery, Alabama being named after a Revolutionary War general, or Juneau, Alaska being named after a famous gold prospector. But today's question is, how many state capitals are named after a president, U.S. president? How many state capitals are named after a U.S. president? Be the first person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We are giving away the Applebee's gift card today at 617-362-1385, and the first correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
The IRS is extending their freeze of the pandemic-era tax credit, which was the employee retention tax credit that was created in 2020. This allowed for business to collect up to $26,000 for each employee on its payroll. The IRS has experienced rampant fraud when it's come to this program. What? Rampant's not strong enough?
So foreseeable. No, I love the adjective. Just so foreseeable. They put a big pile of money out there, and it, like big piles of other things, it draws a lot of unsavory flies.
What ticks me off is that this measure during the pandemic was well-intentioned, but of course, with anything like this, you have bad actors, a lot of them, trying to grab that bag of money.
Every policymaker who made decisions during the pandemic should be fired. Never let anywhere near the levers of government again. Top to bottom, that was so badly bungled from our initial response to closing the economy to these trillions in giveaways that apparently weren't being audited at the time. And we continue to live with the aftershocks in the form of excess demand. There's a lot of money still coming into the economy because of pandemic-era spending that's keeping upward pressure on prices, Paul.
Why do you feel that everyone should be fired? And I mean that in specifically... No one knew what to do when that occurred. A 100-year pandemic that we had never seen the likes of before. Businesses were shuttered down. So I have a little trouble playing Monday morning quarterback and saying
none whatsoever. It's my specialty.
So was your view that there should have been no stimulus at all, or
it was very
lesser?
Foreseeable? There were plenty of economists arguing at the time. For number one, you don't shut the whole economy down. I don't want to get into that. That's somewhat political, but from an economic point of view, that made no sense. There were plenty of people arguing that at the time. Also foreseeable was when you pump a supply-constrained economy full of trillions in stimulus, that might push demand beyond the economy's capacity to reduce, resulting in inflation. That part was foreseeable. The abuse of payroll protection loans And payments like this was foreseeable too. The standards were loose. The underwriting was loose. They couldn't push money out the door fast enough, which politicians and bureaucrats love to do, presumably to curry favor or because it justifies their existence. All of this stuff the abuses were foreseeable at the time. The inflationary impact was foreseeable at the time. The lunacy of shutting down the economy was foreseeable at the time. We had bad management top to bottom, and people with that type of, and I'm going a little bit beyond the economic arguments where I'm most comfortable, but what the heck, it's Friday. Anyone who was in a position of authority who made the judgments that were made that left us with these consequences, which we continue to live with today, should not be led anywhere near the levers of power anymore. We're very exacting when it comes to Boeing's CEO. For example, we hold them accountable.
Right.
A door blew off. No, you weren't supposed to tighten the nut, but you were supervising the person who was supervising the person, etc. The culture was bad. The decisions were bad. We don't hold government officials to the same standards. The idea that we would let any of these people make decisions, serious decisions, in a future potential crisis is nuts to me. Oh, they've learned. They'll do a better job this time. Now I know. Oh, yeah, we gave Herbert Hoover a second chance. Remember that? James Buchanan, he screwed up that Fort Sumter thing. We gave him a second chance. Lincoln had to come in and mop it up. But Buchanan, if he had a second term, he was going to do great. Herbert Hoover, he would have fixed the Great Depression. Just give him another 4 years. I don't get that mentality. We're so merciless when it comes to penalizing failure elsewhere in the economy. Rightfully so. Sorry. Actually, I'm not sorry. I'm not one damn bit sorry.
That was a lot of fun.
At one point in there, I thought he said Lincoln had it coming, and I was like, whoa.
No, I said he did the job, but some might argue, well, if Buchanan just had another 4 years, he might have resolved the Civil War, might have resolved the dispute peacefully without Civil War. I'm sure there are some apologists out there for him. It blows me away.
It is a country that is built on second chances that won't argue with there. Probably
in some domains, yeah, but not in the severe world of financial markets where you fail, you go out of business. There are often second acts, but it's merciless.
Unless you're a financial institution that's large enough, or you're
car
manufacturers.
Unless you're talking about the entire banking sector, yeah, which is now too big to fail. I see your point.
A union representing flight attendants for American Airlines said that they were in talks to extend their deal. This has been a dispute area that's hit other airlines in the past as well. They did not reach a new contract really since the pandemic. There has been really tense negotiations between some of the major airlines out there with its union. It's been an area that has a shortage of supply of employees out there, and rightfully so. These employees are utilizing the leverage that they have as flight attendants to try and get the best deal possible. It started in 2020, but it paused these negotiations at the height of the pandemic. It's been going on for years. Hopefully they are able to get some sort of wage increase and a new contract agreed upon shortly here. Taking a quick look around at markets, we're still in pretty mixed territory with the major indices off slightly. We're going to take a break here, but when we come back, we're going to have the answer to trivia and much more right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So, surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you put in it is going to be titled under your Social Security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust?
Well, the estate planning experts at Cushing & Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, we'll help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, today's trivia question was, how many state capitals are named after a U.S. president? The answer? 4. 4 state capitals have been named after a former president. The 4 capitals are Jackson, Mississippi, named after Andrew Jackson. Jefferson City, named after Thomas Jefferson. That's the capital of Missouri. Lincoln, Nebraska, obviously. And Madison, Wisconsin, named after James Madison. Today's winner is Joyce from Raleigh. She'll be taking home a Financial Exchange Show t-shirt. And Nathan from South Portland is taking home a $100 gift certificate to Applebee's. Trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. And join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Darden Restaurants, which is the parent company for Olive Garden and several other restaurant chains out there, their CEO earlier this week claiming that fast food customers were starting to make the shift to casual dining chains. The argument that's being made is that the price, like Mark and I have talked about earlier in the show today, of McDonald's, whether it be a Big Mac meal or some of the other items out there, have increased significantly, like many food prices, over the last 3 or 4 years, and the gap has narrowed slightly to the point where Chili's and Applebee's and some of these casual dining chains are starting to entice customers to come in with, I believe it was Applebee's that is doing the $9.99 whole lot of burger deal, trying to get wallet share from those low income consumers that would perhaps be spending the money at fast food chains to now spending at casual dining chains. To be clear, there isn't a significant amount of earnings, evidence to back up this trend, but certainly something that they're trying to go after these fast food chains about, these casual dining chains.
Very different experience.
Yeah.
And the whole
really
point
is.
of fast food is that it's
fast. Yeah.
So I don't know if price, unless it's the same or lower. Even then, you're just not gonna wait it out. But as much as we love Applebee's, our great sponsor, there are times when McDonald's,
it's efficiency.
Right. I mean, you only have 5 minutes. So.
You're pulling up with the kids in the back, and you want it a quick turnaround in 5 minutes. It's not as conducive to the casual dining, where it is more sit down and there is a little bit more time that goes into it. But a lot of these,
again, if you order ahead, Paul,
that's true.
If you use the to-go option, again, I'll use Applebee's as an example because of our partnership and we love them. I guess it could, in theory, work like fast food. It'd be a little bit more planning, though. I mean, you do have to use the app or call in, but if you timed it right, I guess it could be as convenient as fast food.
Yeah, McDonald's got in the heat of this discussion where Republicans had suggested that their prices had doubled over the last 5 years or so, prompting the U.S. President Joe Erlinger to come back and say, wait a minute, they have not doubled. They're up 40% since 2019. And we talked about that earlier in the show here, that they are trying to present some more value-based options. They have the $5 value meal deal, though I was talking with another host today, Mark, that there's some, are you familiar with the specifications on the $5 value meal?
No, but I bet I can guess them to reasonable precision.
No,
what are those?
The claim that I heard was that there were some sort of caveats to how value-based that deal really was.
As opposed, like if you broke up the bundle, could you do nearly as well?
Yeah, basically they're making you do. They do have the free French Fry Friday today, though. That's something that is an enticing option for people who at least spend $1 on mobile app purchases, or mobile app customers rather, can get it for $1. Long and short is that McDonald's is trying to fight back with some value options, but it remains to be seen if these casual fast dining restaurants or casual dining restaurants can take share from fast food giants. McDonald's has really struggled in a period of time where inflation has hit a lot of consumers. Those price increases have not helped the stock in terms of the gains that we've seen there.
Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699, or request the guide online from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Housing inventory has been a significant problem in the New England area, and it's not something that's going to be solved anytime soon, really, but there was a law that's been put into place, the MBTA Communities Law, which requires cities and towns that are served by the T to build more multifamily housing options close to these transit hubs. And as a result of that, you have had a significant amount of pushback, as you would imagine, from all of the, not all, many of the residents in these surrounding towns. The classic not in my backyard sort of approach has been often met with a lot of opposition to multifamily projects going on all around these areas. There's a piece here that was done in the Boston Globe, but this is a little bit back, but in Franklin, where a younger resident was renting out a backyard cottage from his parents and trying to get active to promote the development of housing in areas like Franklin and other areas around the Boston area, but it's been met with a lot of pushback. It's not.
I would devote that activism time to getting a better paying job. Start there. Really, if you want to make a difference, you can start there. For yourself and for your family. I'm just not sure how agitating for these massive, and Franklin has a couple. It's next to the town I live in, so I know them.
Mm-hmm.
Has a couple of massive one of them dramatically changed the character of a place called East Central Street. That doesn't mean a lot to most of you, but these big multifamily behemoths represent visual blight. I wouldn't want to live across the street from one. So the not in my backyard is used as a term of abuse. But if you buy somewhere because you like the surrounding, and it's a nice, serene place where you can decompress, and then they decide to put up a 5-story like the one I'm referencing on East Central in Franklin, it dramatically changes the character of the area and changes your enjoyment of the property that you purchased under certain expectations. So to me, again, NIMBY is a term of derision, but I understand. Now, I'm not affected by this, but I sympathize with those who would say this changes the quality of the area in which I chose to live and which I paid good money for. So I sympathize for what it's worth.
Yeah, you wonder if the single-family home, zoning, do they line that up? Does that really make a significant difference? But at some point, I just asked those people who mentioned the not in my backyard to be willing to sort of acquiesce to the fact that you're going to have to pay higher property taxes and more for services within a town.
Have property taxes ever gone down with development? I live in Rentham. We have the outlets, which arguably keep our taxes down somewhat, but there's also 5 cops over there all the time, and I imagine a good portion of other services are devoted to the needs of that particular space. So I tend to question without any good data, so I don't push the issue, whether or not on net it's a good bit. Sort of like casinos.
Sure.
Have state taxes ever gone down? Sure. Now, you could make the counterfact, well, they'd be higher without them. Well, no one can prove that or disprove it, so let's put the theoretical stuff aside. I have my suspicions that taxes would not go down. Maybe they'd increase less quickly with more development because you've got to hire more people to support that. You need more teachers and more public safety people.
Right.
I'm just a little bit skeptical of that argument. Oh, our taxes are too high. Let's bring in another 10,000 citizens. Really? Maybe the data bear that out. Maybe I need to get better informed.
We're going to take a break here on the Financial Exchange, but when we come back, we'll be talking to Paul LaMonica. That will be right after this break, talking with Paul LaMonica right after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required and no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
We're joined now by Paul LaMonica, senior markets analysis writer at Barron's, who joins us every Friday at this time, more or less. Paul, good morning. How are you?
I'm good, thanks. How you guys doing?
Good, thank you. Paul, you're a pretty prolific writer, but today you want to answer the question for us. Are movie chains finally back?
Yeah, that's a great question. I'm not so sure I'd go so far to say that they're definitely back for good and are going to have a fantastic 2024, but there's more optimism after the huge opening weekend for Inside Out 2, much better than expected, even though you would think it was kind of a no-brainer that, this is a very popular Disney Pixar film from 2015, pent-up demand for the sequel, given that it was, almost a decade in the making. But the numbers were much better than expected. And I think it struck a lot of people by surprise because you don't have to wait that much longer, only 3 months probably until it comes on Disney Plus. but people really wanted to go see this in theaters, and that helped boost Cinemark and IMAX. AMC a little volatile, but AMC is almost divorced from the fundamentals of the movie theater business, given how much of a meme stock trade that has become.
So speaking of fundamentals, there's been a lot of hand-wringing over the past few years. I'll just oversimplify and say since COVID as to whether theaters, whether movie theater chains have a secular problem on their hands due to a shift in preferences, or is it rather a content problem? What does the latest evidence suggest to you? Where do you fall in that argument?
I think that people, as we see with Inside Out 2, they will go and have the movie theater experience, even though a lot of people complain even before inflation was something that a lot of people are concerned about. Ticket prices have been going up for years. The prices of popcorn and other things that you buy at the concession stands, much more expensive. So going to a movie theater, in many respects, it's like going to a sporting event. It's not a cheap night out, particularly for a family, but there are event-driven movies. The problem, I think, though, is because of the strikes last year in Hollywood, both the writer strikes and the actor strikes, we don't have as many blockbusters this year. There are hopes that in 2025 and beyond, as the schedule ramps up again, we will have more blockbusters that people might want to go to theaters and see. You've got an Avatar sequel. There's another Mission Impossible movie with Tom Cruise. There's a sequel as well for Superman. So there are a lot of movies that could be the big blockbusters of 2025. I don't know if there are as many blockbusters on the horizon outside of Inside Out 2 for the remainder of this year.
Paul, you point out that sales are down, ticket sales about a quarter the first half of this year relative to last. There's no chance that something like dynamic pricing or some sort of differentiated pricing would ever be applied. It sounds like theater chains are going to rely on blockbusters to bring people back.
It seems like that is the case. I think it's a combination of blockbusters and refurbishing theaters, kind of making them more of a place that you can really truly have a night out that's an event. I think that's a big reason why Sony just announced recently that it's buying Alamo, which is a very popular small movie theater chain. A lot of people go there for the experience of dinner and a movie all in one place. So, I don't think there are that many other places like Alamo out there for a company like Cinemark or AMC or other large firms to buy. But, I think that within reason, you will continue to see movie theater companies put money into older theaters, try and refurbish them and make them, more fancy places for people to go and enjoy the experience.
Paul LaMonica, senior markets analysis writer at Barron's. Thanks so much for the insight and for joining us as always on a Friday.
Thanks a lot. Have a great weekend, guys.
Take care.
When was the last time that you guys were at a movie theater? Are you a frequent movie theater attendee?
No,
Mark?
No.
Ben, you ever?
The last time I went was to see Mission Impossible Dead Reckoning Part 1. So probably about 6, 7, 8 months ago.
Okay. So is it something you do periodically? Or I'm not a big movie goer anymore.
Are you looking for somebody to go with you this weekend, Paul? What's going on here?
You want to share a popcorn, Paul?
I'd love to. With 2 young kids.
Mark, don't go there. Just leave it where it was.
With 2 young kids, it's a little hard to sneak off.
I'm thinking Peter Graves and Airplane.
Oh, okay.
Ever been in a Turkish sauna? Bath, I think he said.
That is a phenomenal
movie. You ever watch Gladiator movies, Billy?
New England's got the 16 best beaches for families, a piece done by the Globe here. Many people familiar with Crane, Good Harbor, and Singing Beach, but in this piece here, they cover a couple others that you guys may want to consider. Listeners out there, Cahoon Hollow Beach in Wellfleet was one that was mentioned, where it is nearby the Beachcomber, but has a family family restaurant on the premises. There's some others that are mentioned in here. Old Silver Beach in Falmouth is one that I've been to in the past, which has nice tide pools for the kids to explore and an on-site burger shack. But certainly with the weather that we've been having over the last couple of weeks here, it is a destination. Some of the other ones that mentioned, Mother's Beach in Kennebunk, Maine is another one. We've got Rock Harbor Beach in Orleans. Do you guys have any particular favorites? Singing Beach is a nice one too that I've been to around here locally if I have to take my pick.
Nantasket was always where we went growing up. Right in Hull, that was always the beach of choice. In fact, half the ones you just named, and I've lived here for almost 40 years, I've never even heard of.
I was blown away by, of these 16, I thought I was going to be able to rattle through each one and it provides some sort of commentary, but I feel as if most people, they just kind of stick with their guns. You know, you go to the same beach that you have closest access to, and hey, I mean, as long as it's got sand and the ocean and a drink in your hand, that's all you can really ask for. Unless you're Marc, you'd rather have a nice chart and some Financial Times and a stack of Barons, next to him, maybe in the backyard with a cool drink in hand. Is that more preferential rather than the beach? In all seriousness, are you a beach guy or pool?
No, nobody wants to see me at the beach or the pool.
Neither? Try to stay out of the sun?
No, it's not so much the sun as it is probably a sense of shame.
Get out of here. You're acting like you're some 400-pound blob that can't go to the beach. No,
but I'm not. Like a lot of people, I think I'm just probably self-conscious. I don't need something else to worry about.
Need to get out to the beach this summer. Need to get out to the beach this summer.
The funny
Marc.
thing is nobody cares. Like nobody's looking at any. You think people are noticing your flaws?
That's
or
like
whatever.
with everything in general.
And I don't.
People are locked into their own lives. That's all the time that we have for this episode of the Financial Exchange. But everyone enjoy their weekend. Stay cool. Enjoy the rest of the Celtics parade, and have a great weekend. We will see you back here on Monday. Take care.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019. And